Markets managed to actually hold the early morning lows. The good news for the bulls is that there hasn't been slippage beyond that. The Nifty Bank has also recovered a tad bit. That's how it's playing out. But let's watch the tech space. Let's watch Reliance, because these are the weak links early on as we're looking at the morning trends. Now let's get back to some more corporate conversations. The Apollo Hospitals board has approved plans to hive off their retail pharmacy business into a new company. Sunita Reddy, MD of Apollo Hospitals, is joining in to give us an update on that plan and, of course, to talk about overall how business trends are shaping up. Good morning, Ms. Reddy. Thanks so much for taking this call. The first question first, what is happening with the pharmacy business demerger now?
6 months, I think, for us to complete the regulatory work. But what we have done is created a front end, stores, in fact, that will be selling the pharmaceutical products.
Okay. Sunita, therefore, I guess listing is on the cards at the end of 6 months?
Well, let's see how it goes. I think, we do want to create value for our shareholders. If listing is the right way to do it, we probably could do that. But we do know that this is not a capital-intensive business. And we are waiting for the ROCs to exceed 20% before we do anything like a listing in the pharmacy space.
Okay. So at the moment, the plan is that it's a 520 crore business. You will keep 25%. That is, Apollo keeps 25.5%. And the remaining go to the other three investors at the end of 6 months. Is that right?
Yes. Yes.
Okay. So they'll be paying you around 400 crores?
Yes, they will.
Okay. What's the plan? What do you do with the money? What kind of expansions do you have lined up for Apollo?
So I think, the plan is clearly to build out 10,000 crores of turnover through 5,000 stores. And only after we've done that, I think, it would be appropriate to look at the listing.
Okay.
Ms. Reddy, I also want to talk about the other business, the larger hospitals business. And there's a lot that's going on there. Big deals. We have the entry of IHH, and now we have the Radiant deal with Max. So how do you see this sort of altered landscape? Does this mean more competition, or what does it mean for your own, for instance, capex plans?
So first, if you look at what's happening, there's a lot of consolidation that's happening. What worries me is that, India needs investment into infrastructure, healthcare infrastructure. With 9 beds per 10,000 people, I think it's very clear that we don't have enough bed capacity. While the dynamics of the demand-supply trends are very strong, all that is happening right now is consolidation. We do believe that with competition, we can see some differential pricing, because these are mostly foreign groups entering India. And their expectations on whether it's return on capital employed or margins will be significantly higher than what is currently happening in this country at this time. So I think it's, we will be able to set new benchmarks for improvement in these parameters.
Okay. Sunita, I'm not still clear about what you will do with the 400 crore. When you sell your stake, that is Apollo Hospital's stake in the pharmacy business to, Hekandra, Kothari and Enam and the other investor, you're getting 400 crore. Will you use that to reduce the debt of Apollo Hospitals?
For the time being, it could be. That's one of the uses that we could think of. But mostly these funds will be used for expansion in the pharmacy business. Like I said, we are looking at 5,000
But why would you want to put it expanding in the pharmacy business? You are holding only 25% there. That money belongs to Apollo Hospitals, isn't it?
Yeah. We're expanding the front end.
Okay.
So that will be capital into the front end of the business.
Okay.
That will be used to expand the number of stores to 5,000. We're currently at 3,200 stores.
Okay. What about your plans for Apollo Hospitals expansion? Like Surabhi was just telling you, you've got two of these big guys, IHH coming in and buying Fortis, and Radiant KKR acquiring Max India. Are you also looking at, it looks like foreign investors are terribly interested in the Indian hospital space. Would you also have you also been approached by investors?
We have been approached by investors, and but I think, that we understand healthcare very well.
Absolutely.
If capital is the only thing that we need, I think we can raise it at the appropriate time. Maybe, in the next year we could do a raise. Probably a rights issue is what we planned. And that will help us grow in terms of creating a new facility. And the only facility that we would look at is something in Bombay, where we don't have a significant presence. Otherwise, we've already built out capacity, and our focus now is really on asset utilization and consolidation of our existing assets.
Okay, that's really interesting. And yes, I mean, just looking at, hospitals in Mumbai, we can always do with another state-of-the-art facility. Ms. Reddy, so what is the kind of equity raise you have in mind for next year? And are you open to a strategic investor also entering in the company? Or is it only going to be via rights?
We're not looking at a strategic investor at this time.
Okay.
And the quantum of equity raise that you'll require for this new facility?
Again, I think by next year our free cash flow situation will improve. So, not a significant dilution at all.
Okay. Your revenues and EBIT are growing by about 12% in the first half. Will that be the run rate you can imagine, or could it even do better?
No, I think it's gaining momentum. So, we're expecting to see good results in our third quarter, at the end of the third quarter.
Okay. All right. And therefore, this plan to raise equity and expand?
Is, again, 6 to 7 months out. Because I think we will be comfortable at this stage.
Okay.
And finally, just a word, ma'am, also on the margin profile. Now some of these, these pricing issues, tense, and what we saw with kneecaps, etc. Now that that's all settled in, what is the margin trajectory for the hospital business in the second half of the year?
So it's picked up. There was 130 basis points improvement from H1 FY18 to H1 FY19. So you can expect to see again a margin improvement happening in going forward. And mature hospitals will be around 23% EBITDA margin. And that's our focus.
All right, we'll leave it at that. Sunita, thank you very much for joining us, and all the very best for you and your entire group in 2019. So that's expecting to do better than the 11-12% that they have done in the first half, and hopes of raising equity itself indicates that they see decent growth prospects. Okay, that's the word coming in from the hospital space. Just a word again on the markets because it's recovered. We saw a third or a 0.25% cut in early morning trades in both Sensex, Nifty as well as in the mid-cap. Now the mid-caps have marginally moved into the green. So repeatedly the dips are getting bought. Let's see if that's going to be the trend for the day. For the moment, it certainly looks positive. Maybe we want to pull up the Asian indices as well. We've had fairly decent tailwinds coming in from the global markets. US did well for the second day running after a monster rally on Friday. Yesterday was a good day for the Wall Street indices, and we're seeing a little bit of green for Nikkei and Hang Seng today as well. So the global winds are actually positive. With that backdrop, let's invite our next corporate. This is, of course, the NBFC space. The past few months have seen a bit of a slowdown in the commercial vehicle sales after tightening liquidity conditions hit financiers. To discuss this and more, TT Srinivasaraghavan, Managing Director, Sundaram Finance, joins us now. Mr. Srinivasaraghavan, good morning. Thank you very much for joining us. First, greetings of the season.
Good morning.
Wish you a very happy 2019.
Same to you.
Thank you. All right. State of the industry first, sir. How's demand looking like? When we last spoke to you, you said that you would be cautious on your own, given the disturbances in the market. How's demand, and is this slowdown serious, the kind of slowdown in commercial vehicle sales that we saw?
Okay, I think slowdown answer is yes, especially November and December were slower than what we saw in the earlier part of the year. But bear in mind, and I think I said this last time as well, H1 this year was really compared to what happened in H1 last year, which was a low. So we saw a sort of extraordinary spike in H1, and compared to that, there is a slowdown. So as I recall, I think CV sales at the end of H1 were nearly 50% higher than last year, comparable period. Whereas that now, I think, is sort of cooled off a little bit to something in the low 20s. Okay. So I think there is a little bit of a problem with the comparative basis. Okay. But that said, I think there, we've come off the highs. November was particularly bad. December, I think, was marginally better, though the CM data is not yet out. I think they should be out in a day or two. But that's the sense that we have, that November and December have certainly been sort of slow. November worse than December.
Okay. So, good morning, sir. Absolutely. And, that's the big question, whether this is just a temporary blip, or are we going to see more of these sluggish trends even in the coming few months? How do you look at, let's say, March, April?
See, I think there's two parts to it. A lot of the growth actually over the last 12 or even 18 months has been driven more by the tipper segment than by the haulage segment, right? Okay. So I think the growth in the tipper segment is continuing thanks to everything that's happening on the infrastructure side, on the road building side, all of that. So that, I believe, will continue. That momentum will continue. On haulage, it's a slightly different story. That's been sluggish actually for some time now. And unless something dramatic happens, in the overall economy, in terms of capital goods and in terms of everything else, I don't see that there's going to be a dramatic pickup on the haulage side. Plus, also add the fact that trucks have gotten bigger, axle load norms have been revised. So it's not any one thing which has impacted sale of the haulage vehicles. I think it's a combination of things. And there, probably, there's not going to be any dramatic improvement in the coming months, I don't think.
Okay, well, actually, the macro numbers are suggesting something else. Yesterday, the GDP numbers actually said construction is doing very well. It's growing at 8.9% compared to, I think, 7% year ago. Or even worse, I think 5.7% year ago. It actually is showing an improvement. That's not reflected in demand?
No, I'm saying the construction bit is what is showing through in tipper sales, which are doing very well. Okay. So that adds up. That absolutely adds up.
Okay. All right, let me come to the smaller part of your business, cars. I take your point about CVs having to be ironed out between, a very strong first half and therefore, lumpy. We must not overstate the lower numbers in the second half. But in cars, the mighty Maruti is saying that, their waiting period has come down. They're offering discounts. Can we move away from that slowdown? Is that also reflected in the kind of demand you're facing?
Yes, absolutely. Cars, I think, is a very different story. I don't pretend to know all the answers, but I think it started with when petrol prices sort of spiked sharply earlier in the year. And that, I think, was sort of the beginning of the slowdown. And maybe it's just possible that there's buyer fatigue. There haven't been really too many new exciting launches. And, we've become a market which wants to see something exciting every 6 months. And that hasn't been there for a while. And I think, the petrol prices certainly spooked buyer sentiment. And also we're told rural buying hasn't been as strong as in past years. So I think there again, it's a combination of things. But the car story is different from the CV story. I think this looks like, it's going to continue. And as you say, if Maruti themselves are saying, nothing great is happening and you should sort of plan on a weak year or a weak quarter or whatever, I think that tells its own story.
Okay. Actually, Mr. Bhargav said much the same thing. He said that they haven't had any exciting launches, and that may have explained the slowdown. And he was looking at only a 10% growth in the coming quarters as well. But he says that it happens once in 3 years. But what about disbursements, therefore, at your end? What would you think is a reasonable rise in disbursements over the next 3 or 4 quarters?
Well, given the way things are going, if we were in low to mid double digits, I would be very happy. Because also bear in mind, some of the recent happenings have also caused a lot of strains for especially CV operators. There are cash flow strains because many of the smaller and mid-sized NBFCs have sort of slowed down, or some of them have even pulled back completely. So some of the usual funding sources for transport operators, I think, have been constrained, especially in the last 3 months. And, cash flow cycles are lengthening. So there could potentially be some stress going out in the next 2 quarters. So, I think growing at breakneck speed is probably not going to be our priority. I think it will be much more about keeping the portfolio healthy and keeping the portfolio profitable.
Okay. Sir, speaking of financing, I don't know if at that time, September, October, whether you also had some exposure to mutual funds, whether there was some borrowing from that channel or not. Now, as you're looking at, your liability side, how do things stand in terms of spreads and margins now that the market seems to be easing out? How do you see this year closing up in terms of margins, availability and cost of funds?
Okay. Just speaking for Sundaram Finance, we didn't have a problem in September, October. We don't have a problem now. We've been very comfortable for liquidity right through all this mayhem that's happened. Yes, borrowing costs have certainly gone up because money did become scarce and therefore did become dearer. So during, October, November, I think between 40 and 50 basis points went up on the liability side. But as you say, that started easing now. So we're quite comfortable, very comfortable in terms of liquidity, squeezed a little bit in terms of margins, which is something I mentioned on the previous occasion that I was on your show as well. There has been a little bit of pressure on margins, but again, this is part of the game. We go through these periods of squeeze, and this one looked a lot scarier, but I think it's sort of eased off now. So at the end of the year, I think we will see a little bit of a squeeze compared to last year, but that's in the nature of the game. Okay. Hopefully, going into FY20, that will correct itself.
But haven't the margins improved for you? I thought there are fewer players in the field. People who have your kind of a liability advantage. So doesn't it make it easier for you to improve margins now?
I absolutely wish that were the case, Lata, except that, this is the space that we play in. Lots of banks also are very, very hungry for business. So we are doing battle with the big boys. Okay. So it's not... Well, I'd love a situation where, we could flex our muscles and say, we dictate the rates, but unfortunately we don't.
Yes, I agree. They have huge savings and current accounts, I guess, so the competition is stiff. Thank you very much.
That's right.
Mr. Srinivas Raghavan. It was a pleasure speaking with you.
Thank you.
Thank you very much for drawing out the contours of the industry as well. It's clearly a little bit of a tough calling with demand slowing both for commercial vehicles and for cars. With that, we get back to markets.
On the market, which has bounced back in positive territory. So yes, a volatile start to the day, but the Nifty Bank has almost recovered all its losses. The Nifty, the Sensex and the Mid-Cap Index are back in positive territory. So how do you trade things from here on? Let's get in the experts. We have Ashwini, Mitesh and Rajat Bose now joining in. Ashwini, now what? Those who have gone short in the morning are wondering whether they should just keep holding and be patient. How do you, look at this recovery?
Well, they shouldn't have gone short in the morning because the morning call was that you'll first go down and then from like 10, 750, you'll find buying coming back. I think the financials have turned around, NBFCs, PSU banks, etc. So because maybe some people are short, that is propelling the market higher. I would think, given that metals are bouncing back and kind of Asia is expecting some sort of news from this Chinese negotiation, I would think that now you could equally go back towards yesterday's highs. So a bit of weak longs getting thrown out and financials and metals bouncing back. So even now it's a fairly decent time to get long. Your stop is morning low 10,750, and we should see more upside as the day goes by. Having said that, Oro Pharma is a buy with a stop of 730, target of 755. ICICI Bank is a buy with a stop of 364, target of 378. Muthoot Finance is a buy with a stop of 520, target of 537. You'd recall yesterday, last hour we were short. We carried those shorts, and early morning you immediately got 100, 120 points. So, the market is not so bearish that you will get day on day negative days. So each time, the market opens lower, you need to look for, short covering to come back.
Okay, fair point. Just coming back to you. Mitesh, good morning to you yet again. What are you trading now?
Yeah, I have two buy calls as well, Lata. Cummins, I think, is showing some follow-through. So buy with a stop below 840, look for targets close to about 875. And BEML, well, that's a stock which has been consolidating but yet in an outperforming mode. I would want to see the stock get past levels of around 930. So it's a conditional buy above 930. Then keep a stop at 919, look for 955, 56 as your first target.
Okay, BEML was Ashwini's pick in the morning. So that one is working very well. We'll just coming back to you. The Rajat Bose is also with us. Good morning, Rajat. A happy 2019 to you if I haven't wished you earlier. How are you trading today?
Yeah, good morning and happy new year to you both, Lata and Survi. Yeah, you did wish me earlier,
okay.
But in any case, happy to be
wished
getting it again. Okay, I have three buy calls. UBL January futures, I would put a stop loss below 1385 and my targets are 1410 and 1422. And second stock is Gujarat Fluorochem. My stop loss is below 930, 950 and 959 are the two targets for Gujarat Fluorochem. Actually, this is showing a major breakout. It could show much more traction going forward. And finally, Godrej Properties, I would put a stop loss below 724.90. 742 and 747 are the two targets. So I have all buy calls as of now.
There's two stocks that really stand out. One, of course, the cut on GRU has gotten a little deeper. It's now a 13% loss. And the other one is Tata Motors continues to roar away. I mean, this is the third straight day where buyers still have the upper hand and sellers haven't yet managed to short, the stock back down to the ground. Ashwini, so therefore a call on Tata Motors.
See, my sense would be that, again, it's a pullback rally. The 200-day moving average on Tata Motors is 255. So just imagine the kind of oversold situation it is in. Yes, maybe it can get back to 230, 240, a bit of good news, a bit of good numbers, etc. But I think it's way away from going into a bull market, etc. And even now, it's not like brisk short covering or 5-10% type moves. I think given the situation of autos, this is probably more advanced in its corrective cycle. Okay. But that doesn't mean you go out and buy it.
Okay, and a quick thought, Mitesh, on NBCC. Is there a trade there?
Yes, Lata. I think, in fact, I did consider it for giving a call in the morning as well. I think the stock is already into some kind of an uptrend. And I am looking at targets of 66.5. So I think around 61 would be a good buy. And keep a stop below 58.70. And I think 66 should be a first target.
Fair point. Gentlemen, thank you very much for giving us your 10 a.m. trades. And we will keep coming back to you on the hour.